Hi there, SwissBorg here. Okay, so I'm just going to talk about what to do if you have taken a trade and it hasn't gone your way, and you're panicking a bit. It's a situation that we've all been in. I think if you've done any trading at all, then you've probably experienced this kind of feeling. Now, if you're doing spot trading, if you're just literally buying Bitcoin and selling it into USDT, or you just literally buying and selling crypto, then this doesn't really affect you, because if the price has gone down, then you obviously believed in the thing in the first place, so the opportunity there is there to just buy more, or whatever you think, if that's a good thing to do. The exception would be something where you believed in it once and then it's gone down in value, and maybe you think, well, actually that's never going to recover, and at that point it would make sense to sort of think, okay, I'm going to bail out of that one and get into something else that you do believe in. I've got an example of that coming up probably in the next week or so, because I did buy something a long time ago that I don't think is going to work out, and I'll show you about that very soon. But what I'm talking about here is the leverage trading, the derivatives trading. And of course, the problem here is that you can end up underwater, and it's not just looking at your account and thinking, oh, that's down a bit. It's the fact that if it comes down to your liquidation price, you're going to lose the whole lot, and that won't be pleasant at all. Again, it's a thing that's happened to a lot of us, happened to me many times, and I don't like it. And and I'm just going to show you a few ways that I use for preventing that happening. Now, these aren't perfect, and there probably are better ways to do things, but this is just what I do. So obviously, this is not financial advice. Do your own research, learn about this stuff, practice with small amounts, don't use large leverage, etc., etc. So let's just show you what I'm going to do. So far I'm looking at Bitcoin right now. So yeah, with Bitcoin we had this nice big pump up from like 27k up to sort of this range here between sort of like 29.5 and 31.5, that kind of range there, and we've been sort of stuck in that range for a while now. Now, I made the mistake of the day of not being zoomed out enough. I was kind of looking at this range here, and I saw the price coming down. I thought, oh, let's get into a long position. And I got into a long position at about $31,200. And of course, what happened was the Bastille Day dump, and down it went significantly, actually, in about $1,000. So I, like a fool, didn't have a stop loss, and I'm now quite underwater with this trade. Okay. Let's just show you. Okay, isn't the biggest trade in the world. This one is actually only $59. Okay, but the mistakes I made was maybe using too much leverage. This is on 15x leverage, and currently this is like 24% down, which is only $14. But it's a good example to show you. I've had things a lot larger than this in a similar situation. So this is good to show you, but just to say that you can do a similar thing with larger amounts. Now, what I've always said, and I don't always stick by what I say, is when you go into a trade, don't use all your trading capital, because if you end up in a sticky situation like this, you're going to need it to help you get out of it. So the options are, well, this is actually USDT trade, so I could actually do a short from a higher level and have a short running at the same time as a long. That's a little bit complicated to talk about just here, because I just want to talk about a few simple techniques. But that idea of hedging, so basically you've got one trade short, one long, and then if the price goes down, at least you don't lose on the one that's gone down. So you can do that. I'll cover that in a later video. If you're interested in me doing that, then just leave a comment below and I'll do that for you. But that's a little complicated, and I'll explain that, as I say, in a later video. Now, at the moment, the problem is my entry is too high. My entry is all the way up here, which is ridiculous. So one of the obvious things you could do would be to try and average in a better entry. So you can see here that the size is 0.029. Because this is a BTC USDT trade, that actually gives the quantity in actual Bitcoin. Obviously, that's the amount multiplied by 15 as well. So what I want to do is just select somewhere lower, where if the price wicks down, it will fill that order and then lower the entry. Now, you don't want to do this if you think you're completely wrong, like, something fundamentally bad's happened, the price is really crashing, and you're just, grabbing onto straws, thinking like, I'll try and save myself, because sometimes if you do that, you will just lose the whole lot, and it's, that is just a horrible, horrible feeling. But if you think your idea was right, you just got the entry wrong, then it might be something worth considering. Now, to me, looking at this, I would say that it is kind of possible that the price might come down to, say, where this wick was here. So something like 29,400, okay? So the first thing you want to do is just check where your liquidation price is. Well, mine's at 28,616, so 29,400 would be a good option. So I'm just going to go 29,400, and I'm going to give it that amount that's there already, and I'm going to open a long, okay. Now, obviously, the liquidation price it gives here isn't taking into account your existing position, so just be aware of that. And I'm going to confirm that. Okay. So now, if the price comes down here and fills that, the entry price should come down to somewhere in the middle there, so probably just below 30,000. And if that's the case, then I've got a reasonable chance of getting out of the trade, maybe with a small profit or maybe with a much smaller loss. So that's one thing I'm going to do with this trade. Now, it is possible to change the leverage, but to do that, you need more margin. So I'm just going to show you a slightly simpler way to increase the margin, which will also move your liquidation price. Okay. So here in the available balance, I've got $95. So you can see here the liquidation price is 28,616. That's a little bit high to me. Okay. So I can come here and go to margin and increase the margin by $95. Okay. And that says here liquidation price 28,616. Liquidation price after margin replenishment 25,338. I'm just going to go confirm. But indeed, now the liquidation price is now 25,338. So the fact that I'm on 15x leverage isn't going to worry me too much, because I don't think we're going to go that low. I think at the lowest it will go to about 27. So there are two things you can do if you are worried about your trade. I wouldn't generally worry about this when it's like, 10 or 20% sort of thing. But when it gets up to like, 30, 40, 50%, that's time to worry. And I know times when I've looked at a trade and it's been on like a 60 or 70% loss, the next minute you can be liquidated. It just happens so quickly, because obviously once people start getting liquidated, they're effectively selling their position back to the market, which means the asset is getting sold and the price drops, and you get these big sort of liquidation candles. But you have to think, every time you get liquidated, you're putting money back on the market, and someone who is long there is going into a position. You want to be the person who's isn't getting liquidated. You want to be the person who's taken advantage of those liquidations by scooping up at a low price. But to do that, you need money on the side. So, as I say, when you go into a trade, don't go in with 100% of your trading balance. Okay, so that was a few hours ago, and it's almost like the market is playing out so that I can make this video, because there was indeed this huge kind of liquidation candle here where I think tons of people must have got completely wrecked, and the price went down to 29,273, which is more than $100 below where I thought it would go. So what that meant for my trade, if you look at the trade history, you'll see that filled at 29,400, and now we're back up here. So in actual fact, I'm only 1.46% down, which is $3. So I stand a pretty good chance of getting out of this alive. Now the question is what do you do at this point? I mean, do you sort of hope it goes up and stay in the trade? If that goes to plan, that's going to be great because you've got like a bigger position and you've got a better entry, and that's really good. It doesn't always work out like that, and once again, my problem here is I want to have capital on the side in case this happens again. I want to be prepared, and so consequently what I'd probably do is I'd close a good portion of the position when it's slightly in profit. So I'm probably just going to go for, well, I might just go for actual dead on 30,000 to close out part of the position. Now, I don't normally go for round numbers like that, but I think for simplicity and demonstrating this, I think I will do exactly that. So I'm just going to go limit close. I'm going to close at 30,000, okay. But I'm going to close 75% of the trade, okay. So I'm just going to go confirm. And then we'll see what happens. Now, obviously, this is an example with a very small position. If this is a larger position, it's exactly the same principle. Okay, for some reason, I just woke up at like 5 o'clock on Wednesday morning, and the price of Bitcoin has gone up a little bit. It did go past 30,000, and you can see here in my trade history that that trade did close at 30,000. Obviously not the entire amount because I only asked it to do a partial close. But, that made like $1 profit. And then it's currently now 3.5% in profit now. At this point, I'd probably think, okay, well, I got out of that. Okay, I'm not sure how far it's going to go up. So maybe I'll just set a stop loss. What I'll probably do is set a trailing stop loss and just let it ride up, really. So I'll probably look at something like, setting an $80 trailing stop loss. So let's do that. So trailing stop, $80, confirm. Okay, so that's got the stop loss there. That all looks good. And indeed, the price did pull back a little bit and it hit my trailing stop loss and the position closed completely, which is okay. It's only a small position, but that got a 8% profit, which isn't too bad. So the lesson to be learnt from this is definitely don't go into a trade with all your balance, because, if you end up in a sticky situation like this, it's going to be really useful to have a bit more money to get yourself out of that situation. Of course, the better situation would be to not get into that situation in the first place and use a stop loss. And when the price plummeted on July the 14th, that would have made a slight loss then. But then I would have had the full capital to maybe take advantage of that enormous spike down that we had yesterday. And if I'd have been in a long from there up to here, I would be in a much more favourable position now, and I'd probably still be riding that trade all the way up to, 34,000. But at the moment, I'm not in a trade. So lessons to be learnt there, but I thought I'd just show you some of the, techniques that I use with ByBit. Now, if you haven't got a ByBit account, do get one by going to savewith.crypto.org/ByBit, and that will get you up to a 30,000 USDT trading bonus when you make a deposit. If you make a smaller deposit, you get smaller bonuses, but that's just how it works. And also, if you do that, you'll be able to get into the trading competition that's going to start in about 8 days' time. So yeah, do check that out. Okay, so that's it for the moment. I'm going to look after some other positions I've got open, and I'll update you on those later on. And the best way to find out about that is to be subscribed to the channel and make sure you've got the notifications set on all. While you're down there, do like the video, leave a nice comment, and above all, tell your friends.